Fiduciary responsibility, also known as fiduciary duty, is a legal and ethical obligation to act in the best interest of another party. The term fiduciary itself means trust, as opposed to what the majority of advisors adhere to, which is called the suitability standard. The suitability standard means that when that advisor sells you a product, that product has to be suitable at that time. It does not have to be the best option. It just has to be grossly not inappropriate. This is a big deal because the vast majority of our industry follow the suitability standard, not that fiduciary responsibility.
Welcome to Critical Thinking Required, hosted by LBW. This podcast is intended for free thinkers, entrepreneurs, and knowledge seekers. Join us as we discuss relevant financial topics, explore with guests their financial journeys, and engage with experts in industries such as space, media and entertainment, real estate, and many more. Buckle up and enjoy the ride.
Welcome back to Critical Thinking Required, where we challenge you to think about finance differently. I am your host, Dan, and today we're going to talk about how to make sure that your advisor is a fiduciary. This is a topic that we wish actually came up more often than it does because it's very critical to understand. Let's start with what a fiduciary is and how much of the industry plays into this. I'll give you a little bit of a background on this concept. Fiduciary responsibility, also known as fiduciary duty, is a legal and ethical obligation to act in the best interest of another party. The term fiduciary itself means trust, as opposed to what the majority of advisors adhere to, which is called the suitability standard. The suitability standard means that when that advisor sells you a product, that product has to be suitable at that time. It does not have to be the best option. It just has to be grossly not inappropriate. This is a big deal because the vast majority of our industry follow the suitability standard, not that fiduciary responsibility. In 2016, there was an administration change that suspended temporarily this rule becoming law, and in 2018 was officially suspended. Conversations of the fiduciary responsibility becoming law are indeed back on the table, but as we know, will probably end up being watered down and not quite what they are meant to be. If an advisor has elected to become a fiduciary, it means that if they do not act in a client's best interest, if they act with malice or significant neglect, then they can face a series of penalties. Monetary penalties, civil penalties, criminal charges, and disciplinary actions from a regulatory standpoint. Now, the question I always have for people is, why would you ever trust somebody with your money, let alone your life savings, who has not made this election to be a fiduciary? I think we all know what that answer is. And the reality is that doesn't stand for your best interest. Hence the whole idea of this concept to begin with. And they might be the nicest, smartest, hardest working individual, but if they are not a fiduciary, because their institution has made it so they're not required to be so, they're only as strong as their weakest link. And that I feel to be an issue. We often then, of course, talk about, well, what makes that advisor a fiduciary? Well, let's pause there too. So what makes an advisor a fiduciary? Well, as I mentioned earlier, in 2016, this was nearly about to become law. What actually makes the advisor a fiduciary or required in all circumstances depends on their security license. So in 2016, we saw an increase of advisors picking up dual licenses, security licenses, that is. Those licenses could be a Series 7, a 63, a 66, and again, as I mentioned, the Series 65. The Series 65 requires an advisor to be a fiduciary, according to the 1940s Act, on any kind of asset monetary conversation they're having revolving around assets and investments. The other security licenses that I mentioned do not have the same level of standard that the 1940s Act has placed on the Series 65. To the point where here at LBW, if we were looking to hire on additional advisors, we would actually ask that advisor to drop all other security licenses and only maintain the Series 65. The reason for that is when an advisor is duly licensed, that advisor has the ability to some degree choose what they are a fiduciary on and what they are not, who it is applied to and who it is not. That's a level of transparency that we find so important that we do not ever want that to be a conflict of interest, and therefore would make sure that all of our advisors carry solely a Series 65 from a security license standpoint. That way, you always know, indeed, that your advisor has chosen to put your legal best interests ahead of their own or suffer penalty. So how do you know if that advisor is a fiduciary or not? Because technically, many will say they are, but again, as we've just learned, may not apply to the entire scenario, may not apply at all. Here's a simple way to be able to ensure whether or not you're working with fiduciary. There is a website. It is called BrokerCheck. If you go to brokercheck.com and you put in an advisor's name or a firm, it will spit out to you a bunch of useful information, starting with how long that person has been licensed, what their history in the industry has been, if there are any disciplinary actions or infractions on their record, and what kind of licensing they actually carry. Like I mentioned earlier, if you see several different security licenses, then it may not be the case that that person is truly a fiduciary. They, again, might say they're acting in a fiduciary capacity, but the key word there is act. If indeed your advisor doesn't show up in there, and instead you are routed from that site to another site called IARD, that is because your advisor is an investment advisor representative. They're independent. At that point, in that site, you again, very similar to brokercheck.com, will see what security licenses they carry, same deals, how long they've been in, what their history in the industry is. It's a similar piece, just not for broker-dealers, for investment advisors. Here's where you can see if they are duly licensed, what kind of licensing they have to ensure whether or not your people or person you're working with does indeed have your best interests in mind, not just perhaps in their heart, but legally speaking. So, if you have any questions, feel free to reach out. Hopefully this information was helpful, and thank you again for joining us for Critical Thinking Required. Take care.
Thank you for taking the time to start your journey of thinking differently and listening to LBW talk about stuff they love. Until next time. Thank you for taking the time to start your journey of thinking differently and listening to LBW talk about stuff they love. Until next time.